All right. Good afternoon, team. Good afternoon. Good afternoon. I hope you're all having an amazing Sunday so far. I hope you had a great weekend of rest and you are ready for one of the biggest weeks of this entire year. This week's major U.S. economic reports and Fed speakers. Monday, we have nothing, absolutely nothing, nothing scheduled. On Tuesday, we do have the S&P Case-Shiller Home Price Index. We got consumer confidence and job openings. This job openings is going to affect the market. So be on the lookout for this data that's going to come out at 6 a.m. If you are in the East Coast, it's going to come out at 10 a.m. And if you are in the West Coast, it's going to come out at 7. At 7, this is where the market really breaks down or breaks up depending on this data. So yeah, team, it's going to come out at 7 a.m. West Coast, and 7 a.m. is 30 minutes after the market has opened on Tuesday. So make sure you set up an alarm for that big liquidity move to happen so that you don't forget and you're not in a trade and then you're caught off guard. So pay attention to the job openings data. This is going to affect it. We got Wednesday, we got ADP, employment, the GDP. Oh my gosh, we got some really big events this week. Advanced U.S. trade balance in goods, advanced retail inventories. These are all going to affect stocks like Amazon, stocks like pretty much a lot of those consumer stocks. So going to be very interesting to see that data. Then on Thursday, we got the usual PCE data that's going to greatly affect the market. And the reason why is because the Fed looks for this particular data to gouge their to pretty much take an approach towards inflation. So this is one of the key data that they look forward to, and the market will react to that. Now, this particular data will come out at 8:30 a.m. in the East Coast and 5:30 a.m. for us in the West Coast, which is 1 hour before the market opens. So on Thursday, 1 hour before the market opens, this data, actually, we got two data. Usually we got the initial jobless claims that always affects the market. Now, there was a very interesting reaction. In that recent one, we got no reaction at all, which was very strange to me. So it could do that again where we get no reaction, but there's a high chance that the market is going to react to that data right there. And then on Friday, we got U.S. employment report, U.S. employment rate, U.S. hourly wages, nothing too important. So nothing really too important on Friday, but on Thursday, we do have some good data. And then on Tuesday as well, we do have some good data. Wednesday as well, we got the GDP. So I'll be looking at those reports and monitoring to see how it affects the market. So it's going to be very important for us to be on top of everything and navigate the market as we get those developed news come out, and we will react to it that way. So we do have the elections coming up, and we also got a lot of earnings coming up. So we're going to be through the earnings first, and then we'll be heading into the elections. So we'll be talking about the stocks that are going to affect earnings this week, and then we're going to talk about what are some scenarios that can potentially affect the market heading into the week after the elections. So it's going to be very important that we do navigate the markets. And yeah, team, how are you all so far? I hope you're doing great. I hope you all did really well last week. The 2K Cash Account team did really well for the week. I'm very excited heading into this week for the 2K Cash Account. We have been doing, ever since we came back last month, we've been doing really well. The account has been growing. We're currently holding two positions. We're holding Google and BBWI, which is Bed Bath and Beyond. And so far, I think heading into this week, we may possibly hit 3,000. The reason why I say that is because considering that it's going to be a volatile week, and the fact that Rain Bond and I are going to be active, there's a good chance that we're going to make some profits for the team. So we're very excited for that. And yeah, team, I hope you're all excited as well. So far, things are looking good. As we can see on the S&P 500, the market is going up. We are up over 0.5% overnight. Over the weekend. And that's really insane. To be up this much is quite insane. And my thoughts are the reason why I think the market is up is because we got over the weekend news that came out that that was stated Iran was not going to retaliate against the Israel strikes. So, and that is good news for the market because it kind of de-escalates things. And we also had, I think, on the conspiracy theory side, I think we got a lot of Trump activities this weekend, and I think a lot of the things that he said was quite positive for the U.S. economy. And I think this also may have been another reason why the market could be reacting so positively over the weekend. But not to stir up any political stuff, I think the market so far is doing good, and bulls are, as we can see here, this is the S&P 500 futures index, and we are pretty much in this bullish channel here. We are going up in this bullish channel, and so far it looks like bulls held this pullback really well last week above the 20 EMA line, and also right at the support of that trend, and pretty much establishing that. And it looks like they can possibly break this level of resistance at historic all-time highs at 5,915 on the S&P 500. Index futures, and head towards perhaps the 6,000 number that everybody has been talking about. So this is going to be very interesting, and I think the only way, or what can create that liquidity, or what can bring in that liquidity to the markets, is positive earnings reports from tech. As we saw last week, there was a major crash on a lot of the stocks that had been leading the S&P 500, and in a way that had been concerning some investors, such as utility sector. It's not good to see the utility sector rallying. This is usually a sign of safe havens, pretty much safe haven rotation inflows from the market movers, and this would usually mean that the overall market could be uncertain. So seeing that breakdown on utility sector and seeing that rotation heading into tech so far is a great sign. We saw good earnings report from Netflix. We saw good earnings report from Tesla, being one of the biggest moves ever since 2016, which is absolutely insane. One of the biggest days for Tesla. The stock went up over 20% in a single day from its earnings. And yeah, definitely quite wild. And looking at Tesla, it does look like bulls have more to go. So be careful shorting the stock. I know I said don't go long before earnings, and now I'm telling you don't go short. But that's just, honestly, that's just the dynamics of the market. And we got to be always ready to adapt on these conditions. And looking at that so far, volume is out of this world. The TTM squeeze, they got the fuel, they got everything to finally break. Actually, no, they did already break this major downtrend that leads to all-time highs. So looking at the weekly chart so far, this is extremely bullish for Tesla. And this is another reason also we have this massive inverse head and shoulders. And I'll show you in a second why this is a good chart pattern. So an inverse head and shoulders is, let's go to our chart here. An inverse head and shoulders is basically showing that the market went from the price action within that given security went from lower highs and lower lows to now changing the trend and triggering higher lows and higher highs to come. So I'll show you in a minute here. Nasdaq and QQQ, we'll go over that as well. But matter of fact, team, one of the main reasons why why Nasdaq is about to perform the way it is because of Tesla, which we will discuss shortly. But so far, this is Tesla. I was trying to show you guys the weekly chart here on Tesla. This is an inverse head and shoulders example on Tesla. And you can see it is, you tell me, team, is that not a blueprint right there? Is that not a clear blueprint of that inverse head and shoulders in motion? And we got a beautiful breakout candle. And yeah, so for those of you that may think, oh, that's, I see Charles is in here. Thank you so much for joining, Charles. This right here, this setup, I know a lot of traders may think, oh, it may be too late to enter Tesla because, you know, we made a big 20% move. No, actually, this could be a great reason for us to look into this so that we can build long-term positions and finally see some upside on Tesla here. So yeah, looking really good so far. And this is what can happen with the inverse head and shoulders breakout. So we're getting that breakout, as we can see there. We're getting that beautiful breakout of the neckline. And step 3 says, confirm breakout above neckline leads to further rally. And so far, the entry is right above the breakout, right at this resistance level. You see that really lining up really well. Your stop loss can be around 216, or even, matter of fact, you could even set your stop loss around, I would say, 235. And if you are targeting, like, let's say the 400s heading into the next two years with like long-term leap contracts of Tesla, or if you are buying shares here, and let's say if your stop loss is somewhere around 235, then this move right here is well worth the risk to reward, because your risk is going from, let's say, 265 to 235, but your reward is going from 265 all the way up to the 400s. And yeah, so that's a good risk to reward for those of you that will be looking into Tesla for the upcoming weeks to position for the long term. Now let's go over. We went over Tesla. So yeah, Tesla looks really good. Let's go over we went over the S&P 500. Let's go over Nasdaq. So Nasdaq is the index that is showing the strength. So what was happening over the last couple of the last few months was that rotation was strong in elsewhere. We had the small caps that were doing really well. We had the Dow Jones Industrials making new historic all-time highs. We had seen the S&P 500 making new historic all-time highs, and now here's Nasdaq coming up very close to its historic all-time highs, and it's looking very, very promising for a nice upside rally. So we have got the liquidity. The liquidity is definitely there. We have been building up a lot of liquidity, and the reason why I bring this up is because if we have the liquidity, if we have set the ground for that to be there, we have and what I mean by liquidity is you got a lot of buying and selling that kind of resets or strengthens the trend, because you shake out the weekends, you get new buyers, that further strengthens this trend, and now you got this potential rally base. And if you get good earnings report heading into this week from Microsoft, Meta, and then Amazon and Apple, then that's going to greatly benefit the Nasdaq, sending it towards new historic all-time highs. So if we look at the S&P 500 here, this is the S&P 500. Matter of fact, since we are looking at Nasdaq futures, let's look at ES futures for the S&P 500 futures. So we went from this is the daily chart. The July 15 historic all-time highs was at 5,714, and now at the moment we are trading at 5,000. I mean, we went all the way up to 5,927, and then we take a look at YM, which is the Dow Jones Industrials futures. We can take a look at the Dow Jones also. It went up far above its historic all-time highs from mid-July, going all the way from 41,000 to 43,500, which is a staggering amount for the Dow Jones. And now here we are on Nasdaq. So taking a look at Nasdaq here, the mid-July historic all-time highs is at 2,983. Sorry, 20,983. We take a look at where Nasdaq is currently trading at. It's trading at 20,638. So we are trading below the historic all-time highs, while other sectors saw that. Nasdaq has not. So I think with earnings, it could be a great catalyst for this to happen. And so far, every single signal is there. Now, I do want to talk about something. If we are bullish and we are expecting the markets to kind of wait for earnings, and if good earnings reports come out from Amazon, and I would say also Apple, then I think that's very bullish for the market. Meta could be Apple. They always do well. And I think Apple may even surprise this time, just like Tesla, because they're getting they got some demand in China, which they have not seen in many years. So if we are bullish and we're expecting the market to push higher and the setups are there, what are some downside potentials that can affect the market and that we should be preparing for, and why should we even pay attention to them? Let's start off with opening up some charts here, team. Now, the reason why we should be careful for the downside is because I want to show you a historical data here. This historical data here, these are two interesting scenarios. So, so far, the data is pricing in a 2% on elections day, okay? We are pricing in 2% on elections day. This means we could either go down 2% or go up 2%. Now, considering that this is the case, and if it's a 2%, Nasdaq could see new historic all-time highs and really just continue higher above its historic all-time highs, right? Especially from positive earnings report. Now, what is the second scenario that can really affect the market in the downside, like in the bears side, and what should be our targets that we should look out for? The second scenario is if there is a contested election like the 2000s, the market could drop by 10%. I know the market dropped 7% in the 2-week period after the contested election on the 2000 year, but heading into this year, I think the correction could be at 10%, okay? And the reason why is because the market is due for a 10% correction. The market is due for that 10% correction, and it's going to come in one way or another once Nasdaq is pretty much exhausted its move. So I think if the elections is contested and Nasdaq tries to hurry up and get new historic all-time highs before after pretty much heading into earnings, then that could set the ground for that drop in the next 2 weeks into elections week. So elections are pretty much in 1 week from today. We're going to get them on November 5th. So once the data is out and it is contested, then we can have a bearish bias, and we can start doing two things. Okay, we de-risk our positions. De-risking, as Paris here said, means that we let's say we're in some positions, right, some bullish positions. We cut those bullish positions by half or more than half to kind of cut that risk out, to kind of de-risk a little bit, so that we're not going to lose more than more than we would want to. And we also want to be sitting on cash so that we can have a lot of buying power to buy the opportunities. Because if we do get a very sharp pull down in, like, let's say a 10% drop scenario within a 2 to 3 week, until the contested elections are pretty much sorted out, then depending on who the winner is and who the market likes, the market could shoot up as fast and come right back up, providing amazing opportunity, amazing volatile opportunity into the election. So this is a great way, and this is a really good way to encourage you to kind of be willing to de-risk your positions if things are too uncertain. And we do see that contested scenario. And if it doesn't happen, then we are good. And the market could possibly have some good reactions and advance higher. But yeah, we will react to data accordingly regardless. But these are, I wanted to share some scenarios here with you to prepare you to de-risk. Now, aside from de-risking, you can also hedge your positions. Now, if there is contested data, right? If there's contested data into the elections, and we basically have to wait for a couple of weeks for the data to come out, to be sorted out, then stocks like VIX, these kind of stocks do really, really well. These securities do really well during these uncertainty times, and can be an amazing way to hedge your positions. So be prepared to do that. If willing, we got VIX that you can buy, or you can do UVXY, and you can also do SQQQ. But I personally would not recommend shorting SQQQ. The reason why, I don't want to not encourage you to hedge, but I think there can be other ways to hedge, just in case Nasdaq decides to be the only one to rally. So if it is the only one to rally, we don't want to be in SQQQ, because that is the inverse of QQQ. So short QQQ, that's what it pretty much. But yeah, team, just make sure you are ready with UVXY shares and VIX, and you can also look at other leveraged products out there that can give you a great hedge within that short period of time if the elections are contested. So far, so good, team. So again, the market looks good. Nasdaq, the rotations through the indexes has been really, really healthy. And so far, it's looking like, while the Dow Jones came down, rotation flew into Nasdaq, and things are looking good for Nasdaq. I'm still holding Bill. Still holding Bill. All right. So now, team, let's take a look at some of those stocks that are going to be leading the market. Let's take a look at Apple here. Apple is doing really well. And it has earnings on Thursday, so this is really going to affect the market. We are inside of this bullish ascending formation, and the reason why I'm showing you these chart patterns here is because I think it's a good way to show you what's going on within their price action. This is what a bullish ascending formation is. It's simply it's a rising rising lower trend line, basically. While this line is this uptrend line is rising, it's signifying that demand is higher every time we sell off. So right here, when we sold off after that rejection, demand was higher than when we sold off at that time. So here it is again, demand is very high around this level, and that led to another upside. So this is what's going on within this bullish ascending chart pattern. And once we do break that level of resistance at 237 on Apple, this can really explode, because it has the setup there. So if earnings are positive for Apple, rotation can flow into this particular sector where it can see more upside. Until we really get positive earnings, I would be careful. All right. So now that we have covered Apple, let's move on to Nvidia. So Nvidia is another tech stock that has been very, very strong, and is currently trading just at its historic all-time highs at 140. So once we break above 140, this can lead to tremendous upside from here and head towards the 150s and the 160s. We have been consolidating here, waiting for the 20 EMA line moving average to catch up, and this has been a good consolidation above its historic all-time highs from the June 20 at 140. So as long as we continue to stay stay above 140. I think any positive reaction that we do get on the top tech is going to greatly benefit Nvidia, because those top tech stocks are investing a lot into Nvidia and all of those products, all of those AI products. So Nvidia still looks good. Bulls are still in control. Now, in a bearish case, once we go down below 137, you can walk away from Nvidia. You can cut your trade, your bullish trade if you are holding it. That can be your, let's say, trailing stop, pretty much your stop loss to get you out of positions and away from pretty much away from the volatility that can open once these levels are broken. Because basically what can push Nvidia down from there? Well, if one of the stocks do report bad earnings and uncertainty comes in, then Nvidia is going to sell off with the market. All right, so now that we have covered Nvidia, let's go to Microsoft. Microsoft reports earnings on Wednesday. Now, this stock here has been underperforming for about 9 months here. Well, I can't say that because we did place new historic all-time highs at 468, but despite placing those that new historic all-time high, we have been relatively flat for about ever since mid-January there. So ever since mid-January, we have been flat. We have been trading very close to that range, and we're finally starting to pretty much see some upside here. So what does this mean for Microsoft earnings, and how can Microsoft earnings affect this price action here? Considering that we have been placing those higher lows, higher highs, higher lows, and now this could be setting the ground for a new higher high at the 460s, which can really shoot Microsoft towards those levels on good positive earnings on Wednesday. So Wednesday after the market closes, if Microsoft reports positive earnings, this is where I'm targeting around the 454 and even expecting it to continue to advance towards 468 historical all-time highs. Now, the trade that we were in for Microsoft was January 17, 2025 call, and the strike was 465. Now, despite closing that contract for about 225 profit, I think it's still a good one to get back into on this sell-off opportunity for pretty much for that earnings. Now, I don't want to really encourage anybody to trade earnings, but if anybody that is rich enough, that's willing to play, willing to trade earnings, you can possibly trade that contract. I think it will be a good one to appreciate. It is quite expensive. Matter of fact, cancel that out. I don't want you guys to trade it. But for those of you that actually have the money to, you can go ahead. Now, another one, this is my favorite here, okay, team? Amazon earnings is something that I'm looking forward to the most, because this stock is really waiting for a catalyst. The stock has been trading just above or just at its historic all-time highs from 4 years ago, back in 2020, and back in 2021. And as we can see here, bulls are really holding well here. So I have been watching this particular stock here for that advance, and what I expect from Microsoft is from Amazon is, if the earnings comes out well, which a lot of retail, a lot of consumer discretionary stocks have been reporting those positive earnings. We saw Tesla, we saw HD that has been doing really, really well. We saw a lot of those stocks that have been doing really well. And if Amazon, like those stocks, Walmart and so forth, does well, then it can finally move on from its historic all-time highs from 4 years ago and see new historic all-time highs in the 230s and 240s and 250s heading into the next year. Now, we do have the consolidation there. We got a great consolidation. What Amazon has been doing is we have been creating base rally, and now we have another base formation. And if earnings go really well, this can lead to another rally. Now, why am I confident that this can lead to another rally if earnings is good? The reason why I expect it to is because, first, once you break new historic all-time highs, that's naturally what happens. Once you break those new historic all-time highs, you're going to see some upside from that, because this tells you that the stock is now ready for pretty much new gain territory. Another reason why I am positive on why I am looking forward to positive earnings is because of this big liquidity candle for the month of August. At the time, Amazon reported that they're spending a lot into they're sacrificing a lot of their earnings revenue, their revenue into AI, and that greatly affected Amazon. Investors had a very negative reaction to it, but the dip was pretty much bought right back up within the following 2 months. And here we are now fully engulfing that massive sell-off, trading at historic all-time highs again, and now waiting for this earnings report to be positive on the lowered expectations to see those new historic all-time highs. Amazon, the bear Bezos, is done selling, at least for now. So let's see. Hopefully, honestly, I'm really looking forward to Amazon, because once Amazon breaks this level of resistance, team, at 200, we're going to trade it nonstop. We're going to trade it all the way towards 210 and the 220s, using either shorter term expirations or even longer term expirations. So it's going to be a great momentum trade if it does beat earnings and gets above 200. So once above 200, we're going to see those expansions. So far, so good on Amazon, team. Let's move on to Meta. Could you please cover any insight for AMD earnings? Yes, sir. Yes, sir. We'll do. We're going to take a look at AMD after Meta. So here's Meta, team. Now Meta, we traded Meta. You guys remember we traded Meta from the 522 breakout. We waited patiently for this one using the 580 call for November 15, and the stock went all the way to 602. Providing amazing profits on that swing trade contract that we picked up for Meta. And here we are now. We've been consolidating above the 20 EMA line, trying to digest that massive rally that we got from that breakout there above 519 from the bullish ascending formation. And so far, we are just pretty much digesting and waiting for earnings. So if earnings goes well for Meta, obviously this can continue to go higher. But my focus is not too much on Meta at the moment. My focus is on Amazon, Microsoft, and also Apple. So if those earnings go well, then I'm looking forward to taking advantage of the Nasdaq QQQ and pretty much tech stocks. Let's go over AMD. So AMD is part of the SMH, which is the VanEck Semiconductor ETF. This ETF, pretty much anytime you hear the term ETF, team, it simply means it's another terminology for portfolio. So you have your own portfolio, and in your portfolio, especially the long-term portfolio, you're going to have a diversified list of stocks, such as on the tech side, maybe you'll have Microsoft, maybe you'll have Apple, and then on the energy side, you're going to have XOM, you're going to have CVX, and those kind of stocks also pay you dividends. So they're going to provide you dividends, and then you're going to have some stocks from the healthcare sector, some stocks from, let's say, the industrials, and so forth. So that's basically what ETFs are. Now, this particular ETF, this portfolio, it only is for semiconductor stocks. So this is the semiconductor ETF that pretty much holds the weighting of a lot of these stuff. So let's take a look at SMH weight. And let's take a look. Now, the reason why I do want to look at it now is because I am really curious to see how that has changed recently. So Nvidia is 22% now. Wow, 22% on Nvidia. I see TSM also gained a lot of market share on the chip industry. AVGO, Broadcom has been doing really well. And I see that AMD is the fourth on the list now, overtaking Texas Instruments as well as Qualcomm. So this is really good to see. And yeah, team, now let's go back to AMD and take a look at AMD. Now, AMD has been somewhat underperforming, and I think if earnings does go well, last earnings was really good. I look forward to the last earnings there, and last earnings got us all the way back up. Sorry, let me go ahead and remove. So last earnings here got us all the way to, it's not, oh, it's from Discord. That's why it's not removing it. Sorry about that, team. There we go. All right, so we can see last earnings here did really, really well, and that pretty much sent us all the way from 110s up to 170s again. And so far, we have been consolidating, we have been digesting that move, and bulls are starting to step in. So if earnings goes well again, this is going to finally put the stock in an uptrend and send it all the way towards the 207, 227. And as we mentioned a couple of meetings ago, if this indeed does work out for Meta, this can really send the stock all the way up on this cup and handle, send it all the way up towards pretty much towards the 250s and 300s. The stock has been stagnant for some time, but we do have a major cup and handle here. Let me just remove all of this. Give me one moment, team. So that is the massive cup here. Sorry, give me one moment, please. Just getting used to this tool here. All right, so here we go. I'm just going to jog with the red one, with this but red bullish with the smiley face again. But yeah, team, we got this cup and handle here, and this is on the monthly time frame, on the bigger time frame. So once this does get some positive catalyst, it can really send the stock towards the 350s, where the stock can finally do a stock split. And I think once they do get to the 350s, that's above the 300, that's when they will probably do it. 300 to 350s to attract, to pretty much attract more investors. Now, let's go over, I want to show you really fast. I want to show you what a cup and handle chart pattern looks like for those of you that are newer. All right, so this is a cup and handle. You can see it just simply resembles a cup and then a handle. We are currently trading inside of the handle there, and the handle is really tightening there, and we're just waiting for that breakout. So you can see what I mean by, if earnings is good, it's going to kickstart that uptrend rally where it can put the stock in an uptrend for the upcoming years here. Thoughts on Visa, and let's take a look at Visa. Visa, let's see. I see what you did there, Charles. Maybe that was a pure coincidental, but that does look like a cup and handle as well. Definitely looks like a cup and handle as well on Visa. The stock also reports earnings this week on the 29th, which falls on, let's take a look. Yeah, that falls on Tuesday session. Oh, wow. So we got Tuesday, is it pre-market? The data's coming out, sorry, aftermarket, not pre-market. So Visa reports earnings after the market. And what I'm waiting for, Charles, is I would prefer to stay on the sidelines and wait for positive earnings. Now, why do I say that? If earnings comes out positive and we head back up to the 290 area, I know some of you may think, oh, we're going to be a little bit behind. Let's say we bought it at a higher price, but that's not going to be true, because what we are essentially targeting is this major resistance line at 290. Once Visa does break that level of resistance, it's going to go for a massive expansion, and I think it's well overdue for it if earnings does give us that catalyst. So if earnings does go well, Charles, that's how we're going to take advantage of this particular stock within the financial sector. What do you think of the recent announcement by Nasdaq on extending? I'm very excited for that, Alex. Very excited for that. Honest to God, I'm really excited for that. I think it's really great because it gives us retail traders an opportunity to buy stocks with these bigger investors, those major institutions. So they can already do that after hours, but we can't. So the fact that they are enabling that, I think that's a good thing. Now let's take a look at MasterCard MA. MA has been, it's just been on a tear over the years, and it just continues to do really well. So if it's one of those stocks you own, it's just been doing really well, continues to do well. Warren Buffett holds a lot of this stock, and like I said, it's because of his fees metric, which is the same reason why he's been averaging down crazy on Siri. Siri is one of the trades that we were holding. But yeah, MA has been, it just continues to go higher. So if earnings goes well, I think this just can't continue to go higher. And if earnings is, let's say, kind of a mix, then it can pull back to create a cup and handle formation on the weekly chart to get a retest at the 20 EMA line and then just rocket on the handle breakout towards the 600s. But it's been one of those stocks that just will continue to rise because, yeah, it's a solid company. I'm not sure. Did we close Siri, team? I think we did, didn't we? Or are we still in it? Either way, I think it looks good. Actually, no, I think we might still be in it, team. We may have closed it for the 2K cash account, but I think overall, if you guys are in it, that's good. I think it's a good stock to own long term, especially with earnings coming up. That could be a really good catalyst. So, yeah. NVIDIA analysis, yeah, I can do, we did an NVIDIA analysis, I can do it again. NVIDIA pretty much broke historic all-time highs at 140. It's currently waiting for its moving averages, the 20 EMA line, to catch up after that big extended rally from the downtrend breakout here. So from 123, we ran all the way up to 144, pretty much taking out the prior historic all-time highs from June 20 at 140. And so far, we have been consolidating, digesting. And if tech earnings go well, it's going to greatly benefit Nvidia. And the reason why it'll benefit Nvidia is because all of those tech stocks are using Nvidia technology now to pretty much see to be part of the competition on the generative AI race. So yeah, Nvidia could gain significantly if tech earnings continue to do well. All right, now that we covered Nvidia, and for the stop loss now on the downside, once they break below 137.50 on Nvidia, then this no longer makes Nvidia an attractive setup, because we will be below historic all-time highs, signifying a rejection there. And then we would also be breaking below a key level demand candle there, which can pretty much it pretty much signals that bears are overwhelming the bulls, and it's sending a double top signal for a sell-off. So as long as that doesn't happen, you can continue to remain in your trade on the long term, holding Nvidia, expecting it to continue to go higher. Yeah, team, that concludes my analysis for today. I just wanted to give you some updates on what the market is doing, what the events are that we should be looking forward to heading into this week. And I also shared some of my pretty much my thought process on how things could play out over the next 2 weeks, depending on the varying scenarios that we have. Now, for the 2K Cash account team, for those of you that are part of the 2K Cash account, I do want to say that Google looks really good and could give us a green day tomorrow for us to make a little bit of profit. And I'm looking forward to that. So Google setup looks really, really great. Another setup, I mean, we did discuss Amazon. Amazon is another one that I'm really looking forward to, but I hope earnings is good. If earnings is good, then this consolidation that we have been getting on the monthly time frame could really see another rally follow through, just like we saw last time. Thank you so much, team. I am looking forward to being in the live trading room tomorrow. And yeah, thank you so much. Take care, all.